In today's video, I'm going to be breaking down the open high low close strategy that has genuinely changed the way that I see the markets. See, the reason that some of the greatest ICT traders out there are so profitable is simply because of their directional bias. Now, I know some of you may see most of your losing trades and you always realize one thing: you are on the wrong side of the markets. How many times have you entered on the perfect execution, but for some reason it's just gone against you? See, it's one of the hardest things to master, especially if you're just starting out. But here's the good news. I've studied hundreds of setups, all in different types of market conditions, and they all seem to follow the same step-by-step process over and over again. So in this video, I'm going to be breaking it all down. This is the proven open high low close strategy to always stay on the right side of the markets. By the way, if you don't know me, my name's Diamant. I've been trading full-time now for 4 years. I've mentored close to 3,000 students. And more importantly, I've helped hundreds of traders get funded with systematic approaches to the markets, who are now, more importantly, consistently making 4 to 5 figure payouts. So let's get straight into this. Now, this is essentially what the strategy is all about. It's always going to be a focus on the higher time frame candle, and then eventually we're able to actually plan out what the lower time frame looks like. So in this open high low close strategy, we're going to be looking at a bearish market in a downtrend. Now, the way this typically works is you're going to have 4 main components of every single high time frame candle. The first one is going to be the open. So this is usually going to be your market open price. In the UK, that will be 10 o'clock in the evening. In Eastern time zone, that will be 5 p.m. All these different types of things. Then eventually price is going to print a high, displays all the way down to the low of the day, and then finally close back up. So this is what the high time frame candle looks like. Now, the lower time frame will typically show you something like this, where price opens up around here. You may have some sort of consolidation. Price eventually gives you the high of the day. And from this point onwards, we will not move past this area. Essentially, price will start to break down. We have our certain entry models at this zone. As price moves on at certain times in the day that are unique, what we're going to see is price eventually will close down all the way down to this area and then start to pull back for the rest of the day. Now, this is not a typical move in terms of price, because if we had this every single day, price would be very easy. A bunch of people could make algorithms that would literally trade this exact thing. But we know that's not how the market actually moves. But generally, we're going to be following this type of model. Now, in between these areas, we are going to have key time zones that we can actually refer to. So 2 main zones that we can actually look at is our London entries and then also our New York entries as well. Now, generally, when we actually look at the markets, it's going to be split up as something like this. This is going to be our daily open. So if we actually mark that out, our daily open, we then are going to have the end of our Asia range. We are then at some point going to have the manipulation of the day. So this is London, or as ICT traders like to call it, the Judas swing. Finally, we're going to get price give us our London entry around this kind of zone over here. We will then see either a New York expansion, a New York continuation. So we've got a New York continuation or reversal at this zone, depending on the daily model that we're actually going to be following. We're going to get into that in just a bit later on. And then finally, we've got the end of day pullback. So this is typically going to happen at the end of London session, but obviously it just depends. Now, the most probable times that we can actually get into our trades are going to be when it's not going to be at the high of the day. It's not going to be at the low of the day, because generally speaking, we cannot identify, is that exactly going to be the high or the low of the day? We want to enter on these times where we've actually got some clear breaks to the downside, pullbacks and entries. Again, New York session as well. Clear pullbacks, continuations, whatever it may be. But these are going to be our highest confirmation times in the day. Now, again, I've created a lot of YouTube videos about these types of concepts in the past, but we're going to be going through that in some other videos, especially when it comes to the lower time frame confirmations. But this is generally what the open high low close strategy is going to look like. Now, the problem that a lot of people find is, how do we actually identify what type of candle we are going to have? Some days you're going to have a bearish candle like this. Some days you are going to have a bullish candle exactly like this. If we were following the same type of idea, essentially we've got the open price over here, price produces the low of the day, breaks some sort of structure upwards, continues up, gives you that continuation for the day, and then pushes upwards like this, right? We don't always have that, you know? So are we going to be going for them bullish price action moves, or are we going to be going for them bearish price action moves? And that is exactly what we're going to be getting into in this next section. And just a quick little pause. If you do want to get funded with a firm that is actually on top of the entire market, I believe number 2 in the space, plus with crazy bonuses, 15% profit share from the actual challenge phase. They pay you an extra $1,000 on top if you don't get paid out within 24 hours. And honestly speaking, their conditions are not the hardest in the world. 8% phase 1, 5% in phase 2 as well. If you do use the code Diamant at checkout, you will actually get another added bonus on top of everything else. You will get 120% reward back from the actual challenge phase as well. So guys, take that opportunity whilst it's there, use the code, and let's continue on with the video. Now, generally speaking, we're going to have 3 main types of candle profiles. The first one is going to be an engulfing candle. As soon as you see this, pretty much you can expect that for the next day, we are going to be moving in that particular direction. When we have a rejection candle, depending on what side of the market it's rejected, essentially it's a reversal area. For example, if we were approaching a PD array at the top over here, and this wick literally just went past it and we closed in the opposite direction, we know that clearly we are going to be moving to the downside. Then finally, we have the indecision candle. Generally speaking, when you see an indecision candle, especially on the higher time frame, the next day is going to be unclear, or the next hour is going to be unclear, depending on what time frame you're working on. So these are the main 3. And to put this all together, this quote really does it justice. Wicks do the damage, the bodies tell the story. Take a second just to take that in and really think about the outcome of it. If the wicks do the damage, it is essentially the manipulation. Just like over here, for example, where we talked about the engulfing candle moving to the downside, London Judah swing has done the damage. It's manipulated the accumulation at the start of the day, and then we had the distribution a bit later on. So if we really had to break this down, we've got accumulation over here, we've got manipulation, and then finally we have distribution. Exactly the same thing can be said in every other scenario as well. In times where we do have indecision candles, yes, it's a bit unclear. The main ones you really want to stick to are these engulfing candles and rejection candles. Okay, so now we know the exact 3 types of candles that we're generally looking for. How can we actually implement this open, high, low, close strategy within our trading? Well, first things first, you need to go to the higher time frame. For me personally, I always look at the daily candle before the start of any daily analysis. Why is that? Because the 2 previous daily candles can actually tell me the story. Now, the first thing you want to do before even all of that is generally identify the trend. As we can see over here, we've got a low over here, a high. Eventually, we're creating this low, and potentially we're waiting for a new high to be made for a follow through to break this structure over here. So generally speaking, we are in this downtrend. This is an internal high and this is an internal low. This is a major low, major high, major low. We know all about that. Now, how can we actually use this? Well, as you can see, in the previous few days, what we've actually encountered is a lot of consolidation. Now, generally speaking, when you've got consolidation, you have to trade in a different way. You cannot simply expect for the open, high, low, close strategy to work very effectively. Now, why is that? Because we know, for example, if this is our high and our low that we can actually expect, if, for example, we are in a consolidation period, generally, we're not going to be seeing something as simple as this. Perhaps, for example, price opens here, does a lot of this throughout the day, then sweeps the high, then the low, and then comes back all the way. This is something that we might see in a consolidation period. But in an area where we've got a trending environment, this is going to be very accurate. Now, how can we actually use this to our advantage? First of all, we know we are in a downtrend. Second of all, we're going to be looking at the 2 previous daily candles all the time. So at this moment in time, we've got an indecision candle and we've also got some level of a rejection candle. So right now, I'm not too clear on my market direction. Cool. Next candle, what have we got? Well, we've got a very clear engulfing candle, but look at the way that it's actually closed. It's in fact rejected straight off of this low over here. And price is now starting to push downwards. So I've got 2 options. I could be looking for buys for the next day, or potentially this rejection right here may lead into some sort of indecision candle, and then we get the proper move. So for now, this is not the strongest type of engulfing candle, despite the fact that it actually broke this level over here. This wick rejection really does tell a story, especially with the PD array that it's just interacted with. Okay, cool. So to be sure, we're going to wait for one more day as well. We play it one more day. What have we got over here? We're starting to get some sort of rejection candle. Price has wicked up into this area again, engulfed slightly upwards, but it's starting to be more of a general smaller close. So we're going to wait for one more day, and there we go. Price has now done exactly what? Price is now engulfed away from this zone. So we know that this level has been touched. We are now starting to get a rejection away from it. So potentially we are following the higher time frame narrative. We've looked at the two previous daily candles. It looks like we're starting to reject off. What can I expect for the next day? Well, it's going to be very simple. We are going to be expecting an engulfing candle downwards. Now, how can we actually get into a lower time frame trade? Well, it's very simple. Following the open, high, low, close method, we expect accumulation to happen in the beginning of the day. We then expect some sort of manipulation, price to expand and give us a little pullback. On the lower time frames, we're going to be looking to get into that manipulation move. Let's just see if this actually works out. Exactly that. We've got now have two engulfing candles down. So we for sure know that we are now continuing this downtrend. We have this candle over here. We have this rejection candle over here. And we even have this follow through with this engulfing candle. Now, there is a rule that you must be aware of. Generally, when you're looking at engulfing candles, 3 max engulfing candles. What do I mean by this? If we see, for example, that there are 3 engulfing candles in one direction, we are usually going to get a slowdown in price. Let's just look at a few previous examples. Indecision candle, strong engulfing, another strong engulfing. And look at that, an indecision candle and price has slowly moved away. Again, another example over here. Rejection candle, engulfing, and another smaller engulfing, price starts to slow down. It's exactly the same scenario. So the longer we stay in this strong engulfing candle move, we always have to think, okay, we've had a lot of a move so far. Now we may actually be deciding to slow down. The next candle presents us with what? An indecision candle. Now from this point, what did I say with an indecision candle? It's very simple. You have to look at your PD array and you also have to consider where are we in terms of price. Well, right now it does seem like we are interacting with the lows. So we could go for any direction. It could be a buy to fill this imbalance over here, or potentially it could be a sell to actually continue on with price. We are not entirely sure with that. This move over here, the daily candle, definitely for the next day we knew we were going to sell. Now we've got this indecision candle, we have to wait again. Let's see. Okay, cool. So we're starting to move slightly upwards. Again, this doesn't tell the entire story, but I am starting to slightly lean into this imbalance actually being filled for the next day. Let's just quickly see. Okay, cool. So now we've actually got this engulfing candle. Do you see the power of engulfing candles, how much clearer they make the image compared to stuff like these, where you've got the indecision candles, 1 indecision candles, 2 indecision candles, we still do not have a clear sense of direction. Now we've got this engulfing candle, what can we expect for the next day? Exactly the same type of thing. Price to give us the high, eventually close down towards the lows, and eventually what we're looking for is for this primary low to actually be aimed for. Let's continue on with 1 extra candle. Exactly that. Now, how is it that we can actually get into these moves? Well, it all comes down to this, looking at the lower time frame. And that's exactly what we're going to get into in this next section. Now, we know that on our daily time frame, we're going to be looking for sells for the next day. And how is that going to happen? Well, it's very simple. We're going to look for the manipulation at the start of the day and then for price to follow through for the rest of the day as a distribution. One thing you must note is whenever price opens for the daily candle, it's always going to have the open price over here. Asia range will generally accumulate throughout the day or throughout that session, and then we are going to see a little box form. Now, for this particular day, we saw a very, very nice Asia range. It didn't really trend on either side of the direction. It's kind of chilling around the same spot. Opened here, close around this point as well. So what are we going to see? We're going to wait for that London Judas swing. as we proceed onwards, as you can see, we're going to be hopefully waiting for a sweep above the high. Now, why do I say a sweep above the high? Well, the main reason is if we are following this open, high, low, close strategy, what we're going to be waiting for is what exactly? For price to create the wick of the day, and then eventually we get the follow through. What does that typically look like? We've got the Asia range as price continues up, gives you that sweep of the Asia highs, and then we start to push downwards. So following that exact plan in place over here, what can we see? Okay, cool. So this is our first sign of the manipulation above Asia range. As soon as this occurs, that's when we're locked in. We are really going to be looking. Now, one time I would usually recommend for a lot of people to stick to is between 8 o'clock to 10 o'clock. This is going to be one of the golden zones that I actually use. A lot of ICT traders would argue from 7 to 10 in the morning. This would be 2 a.m. Eastern time. But I like to argue a bit more for the 8 o'clock because usually that's where we get our injection of volume. Once we swept it and started to move downwards, I am then going to be looking for some sort of entry model to get us into the sells. Now, this particular video is not going to be about the entry models, but more about the price movements. As we can see, price has now broken this structure over here. All we're going to be looking for is some sort of entry. Whether you trade OTE, whether you trade engulfing candles, whatever it may be for you and that fits your plan, it still follows the same daily movement. As we move onwards, London session has perfectly tapped into this fair value gap over here and rejected off. So for me personally, what I would actually look for is something like this engulfing candle right there. Where would I be aiming for? Well, it's a reference to the higher time frame levels. I believe we already had this marked out. So the high time frame level that I would actually be looking for is this level down there. Perfect. So if I know that that is my max capacity for price to move to, yes, of course, we need to look at the daily movements. We can't expect as much. But for me personally, one thing that I always like to do is to set a mechanical 1 to 3. As this continues onwards, as you can see, prices hit it. So we have now on the daily candle, because this is a reference to the daily candle, we have now had the manipulation for the day at the start of the day, and we're now starting to have this follow through. Now, how long does this follow through is going to be hard to predict. The only thing we can do is make sure, can we actually get into our entries, and can we and how long can we hold it on for? You cannot expect for price to make a what? How many moves is that? 130 pip move on Euro USD. It doesn't always happen. Generally speaking, we're going to be around 50 to 70 pips or so for the entire day. So we take our profits and we continue. The next session that you're going to be waiting for is something as simple as this. You're going to wait for 1 o'clock UK time all the way up until 3 o'clock. This, in terms of Eastern time, would roughly be speaking 8 o'clock. 8 o'clock in the morning. That's generally what you're going to be waiting on. Now, with this, how can we actually get into our entries? Well, this is looking at our liquidity points, looking at our points of interest, all that sort of good stuff. So, as price starts to move inwards, okay, we are now eyeing up some potential entries. Usually what I like to look for is some sort of liquidity sweep. So, for example, we know that we've got a nice fair value gap running in between this section over here, and we've got some of the London levels that were created. So if this is swept and we get some sort of entry, that's when we're going to be looking. As price continues, it literally just sweeps into that area and price is now starting to engulf away from it. I will then enter on something exactly like this. Similar type of thing, mechanically keeping it at a 1 to 3. Why is it a 1 to 3, you may ask? Well, because I've done this data over years and years, literally 10, 14 years plus of data gathered, and it always works out very, very well for a 1 to 3, generally speaking on the lower time frames. As price continues, we would obviously set our stop loss at break even at certain zones and continue to move it along. And as price continues all the way on to the end of the day, we can see that this consolidation period is really taking its time. Past 4 o'clock, past 5 o'clock, getting even towards the evening time. Once I personally see this consolidation, I will actually close around that level. So you can see, for example, London session, a very nice 1 to 3. New York session, a very nice 1 to 2, and it is as simple as that. Let's just wait and see what the follow through for the entire daily candle was. And there we go. We pretty much closed at this level. So you can see, how did this daily candle actually form? Very, very nicely. We had what confirmation? If you look at the daily time frame, the previous daily candle showed us a very nice engulfing candle down after an indecision candle. This led me to believe that we are going to be moving to the downside for the next day, alongside our higher time frame narrative that we are bearish. Following that into the 5-minute chart, all we looked for was the opening price of the day to actually get manipulated above after Asia range within our London session. Once London session kicked in, we then look for our entry model. Again, entry models, we're going to be talking about that in other videos, but this is just one example of my entry model that I do use. Nice little fair value gap, strong engulfing candle, and then price starts to move downwards for a nice 1 to 3. New York session then kicks in. We have a level of resting equal highs at this zone, a fair value gap to be tapped in. As soon as we get a strong impulsive move away, we get into the chart. Stop loss above the high, a 1 to 3 take profit again. Unfortunately, didn't get to a 1 to 3 for this entire day, but as you can see, price followed through very, very nicely. Now you can do this every single day. Remember, look at the daily candle. Have a little assumption on where price could actually be moving. You've got to look at the high time frame narrative. You've got to look at the previous 2 daily candles to judge where we are potentially going to be moving. And then from that point, you literally just get in on the follow through. And so that's pretty much it when it comes to the open, high, low, close strategy. Yes, it can be quite complex when you put everything together, but trust me when I tell you, you are going to see higher quality moves. Now let's get into some key takeaways from today's videos and take notes on these. Number 1, every lower time frame move is based on the higher time frame narrative and the daily expansion. Number 2, there are 3 main models. You've got the engulfing model, the rejection model, and the indecision model. This is ranked from highest quality to medium quality to lowest quality. You then are going to look at the 2 previous daily candles. Generally speaking, these will actually tell the story of what's happening for the next day. And always remember that little quote, the wicks do the damage, the bodies tell the story. Number 4, if you have 3 engulfing candles in a row, don't expect a strong move for tomorrow. Now, this is what was the one mistake that I would always make in the past. In a strong direction towards the upside or towards the downside, I would expect, okay, this is just going to continue and continue. The reason it should never be more than 3 is because generally speaking, in a weekly expansion, you are only going to get a few days of expansion. Number 5, link up time and price for higher quality executions. So just like how I was speaking, London session, New York session as well. And finally, use a lower time frame entry models that works effectively. And by the way, if you're wondering what my lower time frame execution is, I've actually made an entire document, an entire 7-step guide down below. So remember to actually get access to that. It's completely free. It's quick and concise and very, very easy to understand. You're going to see everything with it. It's my entire strategy plus a 7-module free course as well. So that's basically going to be it for today, guys. If you really love this video and want to see more, please like and subscribe and comment down what you want to see next time. If you do want to actually watch this 1 to 3 strategy that I personally use, I made an entire video on it. And again, I will see you all in the next video. Take care, guys.